If you're buying in New York City, the very first decision you need to make isn't what neighborhood or how many bedrooms, it's this: co-op or condo. And I'm not being dramatic, this one decision affects how much money you need up front, whether a board of strangers gets to approve you, what you can do with the apartment after you buy it, and even how much it costs you when you eventually sell. 75% of apartments in New York City are co-ops. In Brooklyn, it's an even higher ratio, so chances are you're gonna encounter this decision. Let me break down every real difference so you go into this with your eyes open. I'm Joseph with the Bridge and Boro Team at Real Broker. We work with buyers across Staten Island and Brooklyn, and I'd say at least half of the buyers I work with in Brooklyn are navigating the co-op question for the first time. I actually have a couple of co-ops for sale myself. The confusion is real. Co-ops and condos look identical from the outside, same buildings, same layouts, but legally, financially, practically, they are completely different products, and the wrong choice can cost you months of frustration or thousands of dollars. So let's get into this. Now, before we dive in, I put together a free co-op versus condo comparison guide. It's a side-by-side breakdown of everything I'm about to cover: ownership structure, costs, rules, pros and cons. It's really helpful to have when you are shopping. It's a free download. Link is in the description and the pinned comment. So this is the fundamental difference, and everything else flows from it. When you buy a condo, you own real property. You get a deed, your name is on the title, you own the physical unit and a percentage of the common areas. When you buy a co-op, you do not own real property. You own shares in a corporation, and the corporation is that owns the entire building. And those shares come with a proprietary lease that gives you the right to live in a specific unit. So why does this matter? Because owning shares in a corporation instead of real property changes how you finance it, how you're taxed, what rules you follow, and who gets to say whether you can buy in the first place. So this is the part that surprises most first-time buyers. When you buy a co-op, the co-op board has to approve you, and the process most times is very serious. You will submit a board package. This typically includes 2 to 3 years of tax returns, bank statements, pay stubs, reference letters from employers and personal contacts, and a detailed financial. Then you may have a board interview. You sit down with members of the co-op board, your future neighbors, and they evaluate whether you are a good fit for this particular building. Now, here's the thing. Co-op boards in New York can still reject you for almost any financial reason, and historically, they haven't been required to give a detailed explanation. They can't legally discriminate based on protected classes, but in practice, the process has been very opaque. There is pending legislation that would require boards to provide written reasons for objections, so this may be changing. Condos are different. The condo board has what's called a right of first refusal, meaning they can match your offer and buy the unit themselves, but they almost never exercise it. In practice, condo purchases close without typical board drama. If you value a straightforward, predictable buying process, condos definitely win this round. Now, here's where your wallet really feels the difference. Most co-ops in New York City require a minimum of 20% down. Many buildings require 25%. Some of the stricter buildings, especially older ones in like prime Brooklyn, Manhattan, they could require 30% or even 50% down. Some co-ops are all cash only. Condos are naturally much more flexible. You can find condos that accept 10% down, and new construction condos sometimes accept even less during pre-sale. Also, co-op loans are technically not mortgages. Since you don't own real property, you're going to get a share loan. The interest is still tax deductible, but some lenders won't finance co-ops, which may limit your options. Condos use standard mortgages that any lender can provide. For first-time buyers who are stretching to make a purchase, especially in that $400,000 to $600,000 range, this down payment difference is often the deciding factor. On Staten Island, you'll find more condos and single-family homes, so this co-op financing hurdle is less of an issue. But in Brooklyn, where co-ops dominate in this space, it's something that every buyer needs to plan for. Now, I have sold co-ops in both boroughs, so I have dealt with this on both sides of the bridge. It is the same no matter what, if you're dealing with it on Staten Island or Brooklyn. Prices, obviously, a little bit less on Staten Island than Brooklyn. The process and everything is exact. Now let's talk about what you pay every month after you buy, okay? Co-op owners pay maintenance. This is a single monthly fee that covers your share of the building's mortgage, if the building has one. Property taxes, insurance, staff salaries, repairs, and reserves. Maintenance fees in New York City co-ops typically range from $800 to $2,000 a month for a one-bedroom, depending on the building and the location, of course. Condo owners pay common charges plus property taxes separately. Common charges cover building maintenance, staff, insurance, and reserves, but not property taxes. You are paying those directly to. Now, when you add common charges and property taxes together, condos often end up costing about the same or sometimes more than co-ops on a monthly basis. but the transparency is better. You can see exactly how much is going to taxes versus building expenses. Now, one thing to watch with co-ops, if the building has an underlying mortgage, your maintenance includes payments toward that debt. As the mortgage gets paid down, maintenance can decrease. But if the building needs a major capital improvement, you could face an assessment, which is a special one-time charge that can be thousands of dollars. Now, that can also be split up monthly, like maybe they have to redo the entire roof and it's $100,000. That can be split up to, let's just say, each unit has to pay an extra $1,000 a month for a year, something along those lines. Now, this is a big one, especially if you think you might want to rent your apartment outside. Most co-ops have strict subletting policies. Some don't allow it at all. Others allow it after you've lived there for 1 to 2 years. I've seen that one pretty commonly. And then only for 1 or 2 years total. Some charge a subletting fee. Condos generally have a much more flexible rental policy. Most condo buildings, they allow you to rent your unit with minimal restrictions. This makes condos much more attractive if you're thinking about investment potential, or if there's any chance you'd maybe want to move but keep the unit. This is something to look ahead, right? Yes, right now you might be looking for a 1-bedroom. What's your status? Are you engaged right now? Do you see kids in the future or something like that? Then yes, a 1-bedroom right now makes sense, but it might not make sense in 2 years, 5 years, 10 years from now. Maybe even sooner, maybe even longer, whatever, but it's always worth thinking these things long term. And in this case, rental-wise and flexibility-wise, condos definitely win that one. Now, here's something many buyers don't find out about until they are ready to sell years later. Many co-ops charge a flip tax when you sell. This is a fee that's a certain percentage of the sale price that goes to the building's reserve fund. On a $600,000 co-op, flip tax might be $12,000 at closing. Think about that, right? Down the line, you might owe 10, 15, 20 grand extra on top of other commissions and closing costs and taxes and this and that. You might owe this as well. Condos do not have flip taxes. Your selling costs are limited to the standard transfer taxes, attorney fees, and regular commissions. So this is money that's, again, like I was saying, it's directly coming out of the equity that you built up. So it's important to factor that in when you're calculating the true cost of buying a co-op. Always check what that flip tax is before you make an offer. And it goes without saying that because the flip tax is whatever percentage, if you sell in 1 year, 5 years, 20 years, who knows what that flip tax will be in the future. It's a little scary because it's something you don't have control over. You never know what it's going to be at when it's time to sell. Now, when you want to renovate your kitchen or your bedroom or whatever, in a co-op, you're going to need board approval for the most part. The board can dictate what contractors you use, what hours that the work can happen, and how extensive that renovation can be. Some co-ops even require a hefty alteration deposit. In a condo, you still need to follow building rules, but the approval process is typically faster and much less restrictive. You own the unit, so you have more. Now, it's the same story with pets. Many co-ops have pet restrictions. Some ban dogs entirely, others have size or breed restrictions. Condos tend to be more pet-friendly, though some newer buildings may have weight limits. If you have a large dog or plan to do significant renovations, do your homework on the building's rules before you make an offer. You're not going to want to find this out when it's too late. And then you have to sneak your dog every day. That becomes exhausting. You have to give your dog away. You have to sell the thing the minute you buy it. It could be an absolute nightmare. So this is something that just keep in the back of your mind. You have a dog, you want to do renovations, check with the building first. Now let's bring this home to our 2 boroughs. In Brooklyn, the housing stock is heavily co-op. If you're looking at apartments in neighborhoods like Park Slope, Bay Ridge, Sunset Park, or Bensonhurst, a large percentage of what's available inside of these buildings are co-ops. Condos exist, but they tend to be newer construction and they're usually going to be priced much higher. Brooklyn buyers often have to make that co-op decision because that's simply where the inventory is, especially in that $500,000 to $800,000 range. On Staten Island, the landscape is different. You will find more condos, townhomes, and single-family homes. The co-op stock is smaller, so for many Staten Island buyers, the condo route is naturally more available and the prices are more accessible. A 1-bedroom condo on Staten Island might run $350,000 to $500,000, while a comparable co-op in Brooklyn might be $550,000 to $700,000. And let's talk about down payments. With that condo on Staten Island, you maybe make an offer with 5% down or 10% down, as opposed to that $700,000 co-op in Brooklyn. Co-op, you might have to come to the table with 25% down. It's over $140,000 that you have to bring to closing just for your down payment. So what should you buy specifically? Here's my framework. Consider a co-op if you plan to live there long term, you have strong finances that will pass board scrutiny, you don't need rental flexibility, and you value a community managed building where neighbors are invested. Consider a condo if you want ownership flexibility, you might rent it out someday, you prefer a simpler buying process, or you're working with a smaller down payment. And if you're buying on Staten Island, you'll often find that condos and single-family homes give you more value per dollar than co-ops in Brooklyn, with the added bonus of a yard, parking, and lower property taxes. Of course, like anything else, there's no universally right answer. It depends on you, your finances, your lifestyle, and like I said before, your 5-year plan. Have a little bit of a thought process into what the next potential, we never know what'll happen, right? Tomorrow, your plans and everything completely upended or changed or whatever. But go into this purchase or any home purchase with just, what do I think the next 5 years are going to look like? And then at least make the decision based on what you think. Like they say, we make plans, God laughs. But nonetheless, the co-op versus condo decision, it's one of the biggest choices you'll make as a New York City buyer, especially like a first-time buyer, right? Just because there's so many in this price range. And most people make it without fully understanding what they are getting into. Now, at least you have a basic foundation of, okay, co-op versus condo. If you want help figuring out which option makes sense for your budget and goals, I offer free buyer consultations. I do them all the time, probably 5 to 10 a week. There's no pressure. It's just honest advice based on what I see in the market every single day. The link to book is in the description. Don't forget to grab that free co-op versus condo comparison guide. I'm Joseph with the Bridge and Boro Team. I will see you in the next one.